What up, traders? What up, investors? Ken here from Dyslexic Investor, and we got another fantastic video coming at you today. We're going to be looking at inflation and really on what is driving this market. We can talk about the Ukraine war, we can talk about the pandemic, all this kind of stuff, but I believe inflation is the largest culprit right now, which is driving people's decisions making to rather go on a vacation, stay home. Are they going to buy this new car or not? Are they going to be buying the nice prime steak from Costco, or they're just going to buy some ground beef or eat some vegetables instead of eating that nice, delicious Wagyu beef steak for $300 at Costco? But all that kind of joking aside, the print came out for May, and the numbers were slightly higher for all items in the U.S. city range, so basically at 4.5, not at an all-time high, as you can see here. This was at 8.55. This one is at 8.51. So kind of like a topping kind of pattern. We're not seeing it drastically go up like we have seen in the previous months. Again, this is at a one-year scale. The thing that did kind of come down is the consumer price index for all items less food and energy. So that could be cars and other kind of transitory kind of stuff like that. I said transitory because, you know, our boy Jay Powell likes to say that word quite a bit here. But if anyone shops for food or anything like that, you definitely have seen a price increase, and it has hit a lot of consumers to a heart of almost anywhere from $200 to like $300-400 a month, increasing on gas and fuel, and fuel like for food, and then gas prices. And I was just recently visited LA. I saw gas at $7.26, like in like downtown LA. I was like, oh my God, like this is insane. But yeah, just continue going higher here. We're looking for these prices to potentially level off here. We're trying our best. Like, what is the Fed doing about it? I don't really think they're doing much of anything. They're just potentially going to be talking about raising rates. Here's some more. Actually, I should update this for the inflation numbers here. You can see here that 8.6 level that we're looking for continue going higher. You're seeing this. This is the inflation cost price for the United States. So looking at this chart here, so you can kind of see this doesn't really do the best, but you just literally see the line going up quite insane here on the basic costs of inflation. The one thing that I've also found was quite unique was credit card loans or commercial bank, basically on the U.S. credit debt for a person. So looking at these different things, it was basically zip, zero, nada, nothing the past 2 years. But once things started reopening, flights, vacations, people were out and about, that number has gone up quite substantially on that effect. And then one thing I wanted to also talk about is home prices. So I'm trying to get in the real estate market, maybe buy a townhome or a single family home, and then rent it out and kind of get my feet wet with that kind of stuff. But looking at this, I do not want to be buying a house right now for an investment or even for anything. Like this is, we're looking at very top of the market here. You look here, just this past year has gone gangbusters. Of course, with that pivot down here from the pandemic, we have gone up substantially here, well over $500,000 for the average sales price of homes in the United States. That's not talking about the average sale price in California. It's talking about the whole United States. We've gone from basically this is almost 2 years, or almost over 2 years, from $375 all the way up to $500,000. We're added nearly $125,000 worth of home value in that time frame. That seems a little bubbly to me, I'm not gonna lie. That seems just a huge jump here. A little bit of the average price sales of homes in the United States. You can kind of see here between the blue is the average price sales homes sold in the United States previously, and then this is the ongoing of the red. So the blue is what we're looking for, and seeing the prices continue. Again, it's really the kind of the same chart. Looking at this one, we're seeing that pivot come through here and just kind of skyrocket higher. So both of those are quite remarkable, even though we're seeing this huge influx of like price to sales of homes going up so high. The market's not really reflecting that. If you're looking here at Redfin at a weekly chart looking back 5 years, the thing has been demolished, has been punched in the face. It is going back down to where it was in the pandemic. Same thing with its bigger brother, Zillow. Same thing. It has been beaten to the woodshed on the sense of, again, what does Zillow and Redfin do? They are basically the marketplace, or to help the realtors and people sell their houses, and of course buyers buy them. And of course, if they're continuously losing money, that's not so great as well. So what are we looking at a overall? So we're going to look at XLRE. This is of course the S&P 500 sector for real estate ETF, and of course this one has been kind of slightly toppy. Again, looking here at a weekly chart, we can kind of go into a daily chart to kind of look at more minute. It is getting at its all-time low here. It broke below 41, which was a Fibonacci number, $41.93, and that was a pretty large gap down coming in today. So if that continues to fall, we could see some more selling pressures coming through. And zooming out to the weekly side, an easier $41.93 could be levels of resistance if we do get a little bit of a push higher today, which again, the market is really skittish again about that inflation print that we saw that is not really kind of coming down. And of course, going into the summer, airlines are getting hit, hotels, all that kind of stuff, because less vacation stuff. Coming into this continues going lower. We're looking for the next level of support around $38.28. Another one that I see people in is the Vanguard real estate trust. Basically looks just exactly what we just looked at with the Spider ETF sector there. So let's look at some of the home builders. So Toll Bros, same kind of scenario. They've come down here. We're looking for some potential support here around $47.29. So there's quite a divergence between the Zillow, the Redfins getting completely crushed, and then you have a divergence of the home sale prices continue going higher. So what does Toll Brothers do? They build homes for people, but with the cost of labor, the cost of goods, and all this other transport stuff has gone higher, which of course cut into your profit margins. But Toll Brothers have always done a pretty good job on kind of diverting that, being fairly successful business in building homes, and really nice homes, to be quite the matter of the fact of that. They're a little bit more of the higher end kind of luxury kind of homes as well. So they're could potentially hit harder depending on what markets they lie in, which they're fairly well diversified across the United States. So initially looking for some support here on the short term around $47.29. But if that does break and we continue to see some more selling, below could be going down to $40 easily. Some upside overhead pressure could be around $53.34 if we kind of see that kind of fluctuate in between there. And another one to kind of look at the overall economy and how healthy things are is the IYT, which is another iShares ETF for all U.S. transportation ETF stocks. So this is something that is directly linked to FedEx, UPS, trucking companies, all the kind of the railroads. How many goods is being transported in around that area, and how those stocks are reacting to the current market. Another side note, just remember, this doesn't mean that everything's going to be coming down. These are just like, hey, pumping the brakes. A lot of people have been saying the R word for quite many months now. Some people have been saying it for decades, that we're having a recession or depression, depending on how people word things. But we're all at these levels, kind of teeter-tottering. If we did continuously to sell and the bears kind of come out and start smacking us bulls around, we can easily see this break here below 219 and make its way back down to 200 easily. And that would be the next level of support, because we are in a downward trend currently, and just trying to find support. If that support does not hold, $200 potentially there. Again, you're seeing a lot of selling pressure kind of coming in through there. So let's go ahead and just look over the overall indices. We're just going to start with the QQQ, triple Qs as well. Looks a lot like IYT we just looked at, coming in, selling kind of hard. We're not touching the lows that we saw just a couple weeks ago, but today being down nearly 3%, does kind of hurt, you know, a little pain there. That being said, we're potentially looking for this to kind of stay above that 280 level, which we saw that previous low here. But again, if we touch, it's okay to touch it, that 280 level, but if we close below 280, that's not good. That's good, potentially meaning some more downside coming through. Again, reverting back to that inflation print, people are really tightening up their belt. People are less likely to spend on things. You can see that, of course, with Jets. Jets is very much in a downward trend as well. Jets is an ETF that basically looks at all airline companies. Another we can look at is we can look at Marriott, which is Marriott, MAR, yep. Marriott is still doing pretty well here, even though despite this, they're still kind of, again, coming down pretty hard. The inflation print, looking potentially to kind of create a topping pattern here as well. But at the same note, what is USO doing? This is, of course, the oil fund. This thing looks like it wants to go gangbusters. Of course, Goldman Sachs came out saying that they are going to be potentially seeing $144 a barrel this summer. With USO, we're looking for to potentially, it broke out to basically a cup here. Maybe it could be a cup and handle kind of building here at 86. But if this continues to go, that easy target is around 105, to be quite honest with you. 105 looks something, the one I posted within our Discord was Schlumberger. We talked about this one potentially being at $49 here. If it does break above 49, we could easily see it run to that 55 to 60 range. But this is a pretty high, tight flag potentially. And more times it tries to break out above that level, we could potentially see it jump up here. But be very mindful here. I am selling some put spreads on this to potentially just kind of create that upside and get some of that volatility. Because again, volatility is your friend here if you're trading options, especially with these whipsaw kind of markets. On that note, hopefully this was educational for everyone and you learned something. I greatly appreciate it if you hit a like and subscribe. And again, I'll catch you guys in the next live stream or video. Peace.